Hello, my name is Raitis, and welcome back to another evening commentary. It's Monday, the 10th of March, and we're going to get right into the charts and break down today's trading day and what we can expect going into tomorrow's trading session. It's a Monday, pretty uneventful. Let's start off with DXY and what we can expect. I already talked about DXY in the weekly outlook this morning. As you can see, we have retraced into daily fair value gap. We are overextended on the daily time frame. You can see the massive large bodied candles. Plus, this results in a low probability environment because the market could consolidate um, at the start of the week and then see the expansion with probably we have CPI um, for Wednesday and core PPI on Thursday. So we could see the volatility come into the second half of the week. That's why tomorrow could be a pretty problematic day, but we will have to see and adapt to what the market gives us. So let me quickly pull up my trading model and criteria to see. Yes, the daily low probability filter is if we have overextended daily or weekly candles, 3 to 4 consecutive large bodied candles. This is a low probability filter. And again, we talked about the fact that the market has reached a long-term to near-term objective, which is the daily fair value gap right here. And this means Monday to Wednesday could be low probability as price consolidates, and this can be further emphasized as we have seen by the economic calendar that Thursday and Friday have the major economic releases, and that's what we actually are seeing this week. If I go to the economic calendar one more time, you can see the second half of the week has the more volatile news events in this case. So Tuesday could be a tricky day. I won't be trading Tuesday, at least no currencies. We will get into the equities later because I haven't looked at the charts. To be fair, after London session, that's why I really don't know what the market did. I just saw we sold out massively on the equities. But if DXY's intraday was just consolidating, seek and destroy, no clear expansion, but that's already anticipated, as we said, due to the overextension on the weekly and daily time frame. You can see the massive weekly candle. We just saw that price movements probably during the corona crisis or with the invasion on Ukraine and all this type of stuff. You can see similar candle as in November 2022. So yeah, heavy volatility in the markets to end off the first quarter. Now again, I really don't know what the market wants to do on DXY. We could sell off further from daily fair value gap, invert this level. If we can stay below and invert this level, of course I will look for downside displacement. The market could also consolidate, retrace, reverse. At this point we have to wait for further market information. There's nothing else but to guess. So it's basically 50-50. But again, our analysis on T-bonds is playing out. That's actually a good sign. But as you can see, we have a daily candle closure on T-bond futures, T-note futures. And we have a bullish candle in the XY, which is asymmetry in the marketplace, but which is also already expected because we have reached a near-term to long-term target objective. And this is where we can get asset disparity due to the distribution of positions. Many investors are reallocating reallocating their funds because currencies have been rallying massively. Dollar has been selling off massively, so they have to restructure their portfolios again. This leads to distribution in the marketplace, especially after we have reached long-term target objectives. You can see euro is trading in premium levels at this point, so we have to wait for further market confirmation. But the confirmation that we got is on T-bonds. We expected bullish prices on T-bonds from this weekly fair value gap, trading higher again. Dollar hopefully should keep resume its bearishness if we see further extension to the upside on T-note futures. But again, we're at a key higher time frame level, so anticipate, okay? Anticipate disparity, guys. So that's that. And again, euro, same thing for DXY, just inverted. Let's look at Euro GBP. Euro GBP is actually bullish. I mean, we're still inside this larger consolidation right here. Let's see what the market does. I think really Tuesday can be a low probability day, especially for currencies. Now, let's get into the nitty and gritty with the equity futures. We have ES at that point. I have to really update my PDR levels on ES right here. I did it only for NQ, so we have the 50% of this bearish weekly order block. We're closing below that. We could probably see this level being used for new shorts. Where I have my weekly order block, mean threshold. Wonderful, thank you. Now let's study this level. We have the rejection block, which could be a potential target going into this week because we have CPI, so we could see some more volatility. And yeah, so for tomorrow, for the equities futures, I know we have seen a massive down close candle today, but again, we closed below the daily fair value gap. I really think I mean, I did the mistake. I was too bullish, and yes, we had the 0.5% or 1 hour loss on this trade for New York due to the asset disparity. I mean, T-bond futures are usually correlating with equities, but you can see we're seeing asset disparity. T-bonds, our analysis was right, but sadly, equity futures didn't catch up because we also reached a long-term target at this level, and I usually don't trade London session, and this is a thing I wanted to talk about later on. We're gonna get into some psychological stuff for trading later on, but let's quickly finish up our analysis with equities futures, and then we can take a quick look at gold, and then I will get into some psychological trading topics. Now, again, I told you the weekly mean threshold of this bullish order block can be used as a premium level to sell off tomorrow. We have the slow in confluence. Now we have to see, because I don't like the support and resistance idea. That's not what I like. And what I don't want to see, let's look on the daily. We have this fair value gap, daily inversion fair value gap, which could be used for shorts. So I think we could see some minor retracements into premium level to then look for further shorts to target this weekly rejection block. Yes, so because we didn't get the confirmation, I mean, it was a little bit dumb for me to go into the trade during London session because we have invalidated my criteria. I didn't want to see the market trade below the low from Thursday, where we had the sell side run on liquidity, and I anticipated a retail trap. So markets shouldn't trade below this low. If retail traders are trapped below this low as breakout traders, then markets shouldn't even trade to this level to not let retail traders close their trades at break even. That's why I was a little bit ignorant to trade today. But again, I will go into that psychological matter later on. And I'm talking quickly because I don't want to stretch this video too long. Now we have an immediate rebalance on the 1 hour time frame. I would be watching out for that, where we could see some potential shorts going into tomorrow's price action. I want to see some retracement at a premium and then sell off again. NQ, let's get quickly through. Now let me delete all these. Yeah, this one too. Now let me remove the daily PD arrays because we don't really need them at this point anymore, up here especially not. So let's see. Quickly, you can see how I'm just approaching the market live in front of you. So we have this level for the weekly order block mean threshold, the YM, oh sorry, I painted this one wrong. So we have 653 equal 6. Now this is the correct level, weekly order block mean threshold. We know where we have it now. Let's see what this level is. Okay. DXY, not DXY, NQ doesn't look bad. If we get some retracement into this fair value gap, don't reach the low, and then sell off tomorrow, this would be a nice scenario. I would be really eyeing that. I mean, now I'm bearish. I really think. I mean, it's not guaranteed that I'm gonna trade tomorrow, but it looks so heavily bearish. And if we just look, this is where the impulse price swing started. Many retail traders would have trimmed their stops below this low. We have the equal candle bodies, and I think there's a lot of open float liquidity which is residing below the lows. So we can invert this weekly level to sell short. This is the low of the daily order block right here. And then we could look for some shorts into a discount. We have a volume imbalance below that. So we could definitely look for some shorts tomorrow. This is what I'm looking at, YM. Okay, traded below this low. Nice. On the weekly, again, we have this bullish order block. We have the mean threshold of this level, which we're currently trading at. So this becomes a breaker on daily right here. So let's see what the market does. So I'm overall bearish. We're probably finally out of this consolidation. I think that's clear. I mean, we anticipated this reversal, but didn't get that, so we took some losses. But now we have, again, confluence in the marketplace. But again, we have still disparity. Equities are bearish. T-note futures are bullish. DXY is bullish. Or okay, now we sold off. I don't know. Do we have some news? Okay, no. But basically, DXY is just consolidating. T-note futures are bullish. And probably because DXY is consolidating, equities are allowed to tank. Now let's see what gold is doing. Okay, this also doesn't make any sense, because T-note futures are correlated to gold positively, and if T-note futures were bullish today, we don't want to see bearish prices on gold. So the question is if this run lower on gold actually is a manipulation or valuation by speculation at the start of the week to run for buy side again. So let's outline the daily order block open. We have silver also trading at this level right here. Remember, with the awesome gold trade called out live last week. So let's see what the market can do this week. We have a stop run on an H4, H1 sell side liquidity into a key higher time frame level. I actually like this idea. I really like this idea. But again, DXY has to be bearish. T1 futures have to be bullish, stay bullish. And then, in my opinion, this is really valuation by speculation. And then next week, we're going to see the run for the buys at liquidity. Of course, this is a high resistance liquidity run, and all these lows are low resistance liquidity runs. That's why it could be hard, but we have CPI. We could defer this whole liquidity for the CPI news release. So yeah, let's see, this was the trade from last week. So let's see if we can get institutional sponsorship from this key high time frame level, and then we will look for some entries going into the New York session tomorrow. Ladies and gentlemen, this wraps up the technical side and the analysis. And now the thing I wanted to talk about you with psychology. I think this is the most important part of this video, because again, I told you, the first half of last week, our performance was amazing. And then Thursday and Friday, I took some hits, and today I also just randomly traded London session. I haven't traded London session for probably years, months, I don't know. It's been a long time because I don't trade London session. But I thought, with the idea that the weekly swing low on the equities futures will form in direction of higher time frame order flow, because we're inside a consolidation, and because of the decoupled markets with the treasuries, I thought it would be a good idea to just trade the low of the day. But I just simply forgot that my expectation was that we shouldn't trade below this low, and just ignored this part of my analysis. And I didn't do any checklists for this trade. So it started off with a mess and we ended up with a mess. So that's why, guys, you really have to, and I'm just looking at my notes, just if you probably asking yourself, why is he looking down? I'm just looking at my note from today, and I've written down that your personality, your current personality, doesn't align with the one you want to be, with the ideal future of yourself. Maybe not consciously, but definitely subconsciously. Okay? So, for example, you want to be a great trader, but subconsciously you haven't accepted what it means to be a good trader. It means you have to be disciplined all the time. You have to fill out all your trading checklists, be disciplined with that, and then you have to respect low probability protocols. When the trading plan says don't trade, then you don't trade, even if you feel the desire to feel better, to take place on a trade. I mean, this literally is the key point. You have to align your personality, or let me phrase it in different words, like I've written on my journal. You have to live in alignment with the person you want to be. Because if you don't live in alignment, the only person you can't lie to is yourself. Because just imagine you can lie to a person and he wouldn't notice that's a lie. But if you tell yourself a lie, you know that. If you, for example, forgot to fill out your trading checklist, you know it's a lie, that you didn't do it. Even if your dream reality is being a profitable trader, being a disciplined trader, following your risk management protocols, and so on and so on. So you have to align your whole day with the vision of your future ideal self. And you have to think about, what would your future self do in this moment to get to the point where you want to be. You have to really think about that in every single situation, so you align your future reality with your current reality. And then eventually, over time, these two will submerge, and everything that you have envisioned yourself in your mind of how you want to live, of how you want to trade, and so on, will manifest itself in your reality. And that's my point I wanted to make, because that's why many people, and still I'm struggling to reach success. Because if I would be earning $1 million a month, I wouldn't be doing probably these videos. Except I'm really generous, I don't know. But we will see what the future brings. And I see the videos 20 minutes long. But yeah, that's really the truth. Because there is no better feeling than laying in your bed in the evening and then just realizing that you have done everything as you planned to the day before. You said to yourself you would go in the gym, you went in the gym. You said you would follow your protocols, you followed your protocols. Doesn't matter if it was a win or a loss. It was a loss and you followed your protocols, it's just the cost of doing business. But trust me, this feeling of fulfillment, when you align yourself, your current thoughts and actions with the vision of your future self, there is no more fulfilling feeling or emotion than just doing this. Simply just aligning your current reality with your future self. Because if you reverse engineer the process, if you set yourself a goal, you want to become a trader who earns $1 million a year, then you have to reverse engineer the process. You would have to think, how does a trader who earns $1 million per month, what would he do? What would he do in your situation at this current moment? Would he over risk? Would he over leverage? Would he ignore his trading protocols? Would he just trade at a random session like I did today, which he usually doesn't trade? Probably not. And then you have all the answers to your questions. You already know them if you know where you want to go in life. And this is a very philosophical, and I hope somebody found this lesson evening commentary insightful. And we will see us guys tomorrow. And I will literally focus on this exact thing for the rest of the month. Like literally, because there is no more fulfilling feeling than just doing this one simple thing. Just doing what you have planned for and what you have envisioned for yourself. With that, ladies and gentlemen, I wish you a pleasant evening. Stay safe, trade safe. We will see us tomorrow for a trade analysis if I take a trade, or to another evening commentary if I don't take a trade. So stay safe, trade safe. Bye-bye.